we're not expecting a knockout blow one way or the other. We don't think this is going to break out into a full trade war. We don't believe there's going to be a single agreement that's going to make both countries sort of hug each other. You know, it's about small little bargains. And what we're seeing is that moving down the line. We heard what happened about Trump's concession to ZTE, which was a very nice sort of movement forward. And then China reciprocated with sort of relieving sort of the scare on agricultural products. So these are little steps. You're talking about two massive ecosystems. It's not going to happen in one step. It's going to be small little bargains, and that's what we're seeing.
And on top of that, Peter, I mean, China today denied reports suggesting that it would slash the U.S. trade deficit by up to $200 billion US dollars.
Yep.
What do you think will happen next now?
Well, the surplus is now about $375 billion. So it's getting there. It's step by step, you know. And what we're seeing is that the war of words is not escalating. And what we're seeing is good gestures on both sides. And I think that's a very positive sign. Again, this is an extremely complex trade ecosystem. So there's not going to be a single signature that's going to end it. But we see little baby steps, and now we'll continue to see what we're going to do, or we're going to continue to see what that has moving forward.
You're sending a very positive note,
Correct.
But still there are so many issues on the table,
so
right?
The big one is that the U.S. is still conducting the 301 sort of investigation, and that is bothers China because it goes directly into sort of their trade practices. And China would like to end that investigation, and we're not yet ready to believe that Trump is going to give that up. So there are some major barriers in terms of making peace. But again, it's about bit by bit, step by step.
Let's stay in the U.S. and talk about the American economy as well. Now we have seen U.S. yields rise in the last couple of weeks, and the benchmark 10-year Treasury note yield has reached around 3% this week, so picking up there as well. Do you see it continue to rise from here?
Yeah, well, this is very sort of unexpected. The U.S. was supposed to go into a cyclical downturn, a mature cyclical cycle. And what we're seeing is really strong economic data and acceleration in the underlying economy. We just saw good numbers on retail sales, which means that the consumer is not tightening up in anticipation of higher interest rates. So it's a very strong signal from the U.S. economy.
So actually very positive, surprising news for investors.
Agreed.
Do you think that they are reallocating their portfolios, their strategies?
Well, not just yet. I think what we're having a balance in divergence. On one hand, you're having the U.S. Fed, who are concerned about inflation pressures building because of the stronger economic data. But the other hand, we have Japan and the ECB, and even now the BOE, that are moving sort of in a less hawkish, less moving away from normalization. So that's balancing it out in investors' minds. So on one hand, you have the Fed tightening. On the other, you have central banks that are not keeping loose monetary policy, and that's allowing investors positive sentiment around equities.
We're talking about global investors here, but what about the Swiss investors here at home? How will they be impacted by the rising U.S. yields?
Well, it's going to be more challenging, and it means that getting good valuations for Swiss equities is going to be a little more complicated, given how attractive both the yield and the valuations are in the U.S. So we think that it's going to be challenging to get much better here in Switzerland. There is sort of the slowdown on the growth side here in Swiss.
Where do the main headwinds come from at this point for the Swiss economy?
It has been for quite a while on the fact that the currency had been quite strong, and that going into the new year, Switzerland was faced on a relatively strong Swiss franc.
It's weakening now.
So now
the
things are getting a little bit better.
Again.
Exactly. We can see this S&B already getting exciting. They have a good trajectory on the Swiss franc, and that will improve significantly on a small, open Swiss economy that relies on globalization, relies on competitive currency valuation. So having that weaker Swiss franc should allow to give Swiss economy a little bit of a lift.
And talking about the Swiss economy, and we've mentioned the US-China trade war, if things do heat up, which you are not expecting. How will we be impacted here in the country? I mean, the aluminium and metal industries have kind of, issued a warning as well.
Absolutely. I mean, one thing that Switzerland is a sort of disadvantage is that it's a small, open economy. So things that happen in Europe, in China, in the U.S. Are out of Switzerland's control and will directly affect the economy. On the other hand, a lot of the manufacturing, a lot of the services are very high end, and they're very specific in terms of who wants them. So the elasticity of these type of products are quite, shallow. So,
and we have mentioned Richemont watches, for example, just before, that is trying to buy back some of the excess watches. So
well, I think
we live in a globalized world,
we do.
it?
The watches probably, we'll hear a little bit more about that, I guess, later. But it's a more difficult because it's not only the globalization and trade, but also technology that brings it into place. But when you're talking about the Swiss sort of metal industry, you're talking about very high-tuned manufacturing process. And people can't get those aluminum products, those steel products, really anywhere else in the world. So regardless of what's happening, with U.S. and China and trade and also the currency, people will come to Switzerland to shop for those products.
Let's move to commodity markets now, Peter, and Brent crude prices. They have been hovering around $8 a barrel in recent days. This is kind of a sixth straight week of gains now. But we do have the Iran issue, looming sanctions there. Then we have the elections coming up in Venezuela this weekend.
Agreed.
What do you think is going to happen to crude prices?
Well, commodity commodity traders love a great story, right? And all of the news headlines look for a higher oil price. You have growing demand, you have the summer driving season in the U.S., all will tap into tight supplies, coming back on Nigerian disruptions, Iranian sanctions, and Venezuela's sort of political sort of chaos. So
it all comes down, the major element and factor moving oil markets at this point is just geopolitical.
Probably more than anything else. Again, we're not seeing the demand that we expected, so it is sort of speculation. So the question is, will the hype live up to reality? And that's sort of where we are right now. And in our view, a lot of people are anticipating that Trump will sort of be hamstrung or not be able to put together his full sort of political agenda when it comes to places like Iran and Venezuela, for fear that he'll send oil prices significantly higher. But our view is slightly different. He gets a significant voting block from red states that are dependent on the energy complex. So by pushing up oil prices, on one hand, it causes a tax on U.S. consumers. On the other hand, it talks to his base and creates a very vibrant economy that will, again, help out his outlook. So we do expect that he will be very heavy-handed when it comes to Venezuela and Iran and not be so concerned about the price of oil.
Let's move to my favorite story of the day now. It's not Meghan and Harry, but actually,
that's what I was hoping for.
Maybe yours. I'm sure you're going to watch the wedding tomorrow, isn't it?
Of course. Who's not watching it?
But actually, interesting news coming out of the Vatican today, and Pope Francis mentioned that the derivatives market and credit default swaps is a ticking time bomb. Why would Pope Francis discuss financial instruments?
I can't really talk about what's going through the Pope's mind. Part of me, maybe I'm just old and gray, but think that he's talking his own book. And, we know the Italian governments or regional governments have been very active in CDS, and it has not worked out particularly well for the government.
And credit default swaps, CDS, they were one of the main reasons for the financial crisis of 2008. So is Pope Francis basically saying that we might see another financial downturn?
No, I think he's just probably being cautious. I don't really know why the timing. Maybe the Vatican's got a big position that's coming into play. But they are sort of weapons of mass destruction, financial weapons of mass destruction, as has been described. So it's not too out there that he's expressing, that he dislike for them. The timing is interesting. I can't really speculate why the Vatican is.